I said, this seems like a really important thing.
True professionals like this who represent what we are in every single market.
There are opportunities out there, and you just have to grab it.
But a moment like that, where you realize you really do touch people's lives, it's a good feeling.
I mean, it gives me so much joy.
Yeah.
Watching or giving somebody the keys to a house.
Yeah.
And saying, here, welcome to your new home.
CNG Media.
Hey everyone, this episode is in collaboration with Robert Graham, featuring styles from the Short Hill store in New Jersey. Enjoy the episode. Welcome to Vino with Vito. Today we got Joe Sheehan back again. Joey Mortgages, as they call him, right?
100% of the time.
The other day I actually had my son Ralphie here. He wanted to come today again, but then he bailed out at the last minute. It would have been great because you guys.
Been awesome.
He was an intern with you guys and stuff. And the crazy thing is, Ralphie and I wore Robert Graham matching shirts. I had one color. He had a different color.
Did it just happen that way?
Kind of, yeah. He even wore Cupolini and stuff.
Wow.
But check this out with the skulls.
I love it.
Right?
Yeah.
A little different. And they still make a subtle, little black shirt. So I figured, you know what? It's a little cold out there. And
now, do you consider this a 3/4 zip or a quarter zip?
I would say probably a quarter zip.
Quarter zip. Thank you.
A quarter zip.
Nick, Rick, it's settled. It's a quarter zip.
Not a 3/4 zip.
It's a little inside the office little joke there.
Okay. You got to love that. You got to love that.
I like that. I didn't know they made those.
Yeah. I got a few different ones. This one actually has skulls on it, which is pretty cool.
I love
it. But get a little chilly out there. Put it over a nice, plain shirt, and
maybe when you're out golfing.
That's it. I don't golf. That's one thing I got to try to take out. I did one time. Or
it's like
twice.
My newfound love.
Do you really golf?
Oh man, it's like God, my wife, my son, golf.
Really? Wow. They say a lot of business is done on the golf course.
I mean, I would like to think so. At least that's what I tell my wife.
Yeah, that's it. And no drinking. Never drinking.
Never drink.
Yeah, never on the golf course.
I take it very serious.
Yep.
I take golf very serious.
See? And look, today you're not drinking. You're dry January. You got your water. I actually, can't be Vino with Vito without having some Vino here.
I know.
So I'll have a little bit of wine.
I'll whiff it a little bit.
It's actually a Cabernet. It's not bad. Not bad. A cheap bottle of Cabernet. Hey,
we'll take it. We'll take it.
That's it.
Cheap's like $18, $20.
Oh, this was actually like $9. You can't go wrong.
You can't even get that anymore.
Nope. $9. I'll drink it all day long. I mean, all night long. Not all day. All night.
There's this Instagram I follow. I can't remember the name of it, but what they do is they give all like the expensive bottle wines the alternatives that taste very similar in a cheaper bottle. So instead of a Camus, they have a $20 bottle of this.
Right.
They're like, it's from the same,
region,
winery region.
Yep.
The same winemaker sometimes. Yeah. So I started following them and started picking it up because I really like wine and I like to drink a lot of it. So I can't be, drinking $80 bottles of wine every day.
Me neither. Yeah. Absolutely. I like speaking about Camus. They have a bottle called Bonanza.
That's the one. Yes, Bonanza. Yes.
Yeah, it's like a $20 bottle. Great bottle of wine too.
Fantastic.
Great bottle of wine. We've had it a couple of times. I actually bought a few cases. My daughter really loves it. My son-in-law, and I gave her a case of it, and she was like ecstatic. Wow, thank you. But it's a great bottle of wine.
It's like a total wine. I think it was like $18, $19.
$19. Yeah.
Can't beat it.
Can't beat it.
I know, and it tastes just as good. I mean,
why not? Absolutely.
Maybe the true winos will say otherwise, but
I'll give you a story. I think I told this one time before, but my daughter was going to prom.
Okay.
And she was going to, and they always have like a big gathering before prom.
Yeah.
And it was a house in, I think it was Essex Fells or North Cornwall. The guy was a surgeon. Okay.
It was a nice house.
Beautiful house.
It was 6,000 square feet.
At least. It had a pool in the back with a waterfall running underneath the deck.
Oh,
he had the bar there and everything.
Love it.
And, we was drinking some wine and stuff. We started talking. His daughter was friends with my daughter. I had mentioned to him, did your daughter bring my homemade wine to you? He's like, no. I go, you got to be kidding me. She must have drank it, right? I said, I'll make sure we'll bring you another bottle. But while we were talking about wines, and he was saying the same thing, he had a big wine cellar.
Yeah.
And all his friends, open this,
open this,
$800 bottle of wine, this bottle. Everybody knew wine, he was saying. Everybody knew wine. So what he did one day was he made believe he opened an expensive bottle of wine, but put like a $10 bottle of wine in there,
snap.
okay? So they're all tasting it. All his friends were going, wow. You can tell the difference on this. They had no friggin' clue. I was dying. I was dying.
Man.
But that's how it is sometimes.
It's true.
Wine is wine. Come on.
Especially something you drink and it's
gone.
gone.
Yeah,
you know,
you spend $800 to drink a bottle. A glass of wine's costing you, $200-$300.
And you can get some really good wine for, in that like $15-$20 range. You get some great wine, and you can't tell the difference.
You can't. Especially when the wine I drink. Come on.
Yeah.
It's got to be like a $10, $15, $20 bottle of wine max.
Oh yeah. I'll tell you a funny one that when we went down to Cafe, oh my gosh, it's in Atlantic City. One of the cafes, 2825. So friends of mine manage it, and then Johnny and Matt been going there for years, and everyone knows somewhat, somehow. So, but we go there. It's a couple of years back for one of our HQM parties. Right, we were down at the Realtor convention, and then we went out there, and it's a very nice restaurant. High end, you got to know someone to get in type of thing, but they're very open and they're great, and they're actually expanding a lot. But we're there, and again, bottles of cake bread and Camus, a couple bottles, and then we had already gone through a couple bottles. I'm like, waiter, just bring me a bottle of wine. He's like, oh, well, you want it? I said, no, cheap wine, cheapest wine you got. Yeah. And so I kept saying cheap wine, and then you hear Johnny's like, what are you saying to him? What are you saying, cheap wine? And so as he's walking away, I'm like, the cheap wine, the cheap wine all the way in the back. They bust me. That's 5 years ago. To this day, they bust me for that. They're like, oh, Joe, get him the cheap wine. The cheap wine.
But after a couple bottles of Camus or cake bread,
I don't need. I don't need to spend $300 on the next bottle of wine. Even though obviously I wasn't even paying for it. Thank you to my company. But still. Just give me the cheap wine. I know the cheap wine there wasn't even cheap.
Yeah, probably the cheap wine. I went to a steakhouse one time, a $10 bottle of wine, they were charging $90.
Oh, geez.
I never went to that restaurant again.
No, I'm good.
And usually for dinner, maybe we'll have 2 bottles of wine. That was one bottle and that's it.
Yeah, you're cut like, that's it. I'm done.
$10, $90.
Forget about
charge.
It.
Screw that.
No thanks.
No
thanks.
No bueno. But where do you think these rates are going, Joe? The bonds, today is January 17th, and I know the bonds the past couple of days came down
a little bit.
Came down a little bit.
Nice little reprieve.
Yep.
I think, we're going to, a lot of things are going to change on Monday. The inauguration, Trump's going to be in office. He's going to put a lot of things into place right away, and it's going to cause volatility next week. So we'll talk in 2 weeks, and I'll tell you once that kind of cooled off just a little bit, because it just depends on what he does his first days in office really will affect how the bond market's going to react. So up until now, really actually when the Fed started cutting rates back in September, right then, that's when the bond market was really getting better, right? We saw the Treasury. When we talked the bond year, the bond market, mortgages closely follow the 10-year Treasury.
Correct.
Right? If you want to know where mortgage rates are going, follow the 10-year Treasury.
Yep.
You could almost ignore everything else and just follow the 10-year Treasury. For as long as I've been doing this, close to a decade, just follow the 10-year Treasury, and you'll know, well, if interest rates are up or down. You won't know exactly what they are, but just if they're up or down that day. So around September, we got down to like 3.8, right? So 3.8 on the 10-year Treasury, which was great.
Yeah.
We had been above 4% for a while.
Right.
So that really helped. Conventional mortgage rates were down to like high 5s, low 6s. We saw a nice influx of refinances, purchases. So since then, we've gone from 3.8. Last week, we hit a high of 4.8.
I was just going to say that.
So we're up
4.8.
100 basis points.
Yep.
They call it 1 basis point in their world. In my world, we call it 100 basis points. But still,
right.
100 basis points in 2.5, 3 months. That has driven rates up over 7% again. So now we're at average 30-year fix, over 7%. You can still get in the high sixes, but over just average across the country, you're still seeing above 7%.
Above 7, right.
So for now, we've kind of seen a little pullback. We're kind of getting a little bit under 7% again, still around that 7% range. And then moving forward, I do think that we'll still see a bond market that kind of sits between this 4 and 4.5%, which would keep mortgage rates in that 6.5% range, give or take a little bit up or a little bit down. So that's what I think 2025 we're going to see is mortgage rates stay in the sixes and probably in that mid-6 range, maybe a little bit lower, maybe a little bit higher. And it depends on what the new presidency does with tariffs, with, if they pressure the Fed to really, it doesn't matter about cutting rates anymore. It matters about their budget.
Right.
The government stopped buying mortgages after COVID. They were buying $80 billion a month at one time. They went to zero. So they were the biggest buyer of mortgages on the secondary market. Now they're buying zero. So if they go back to buying mortgages, if that was the case, they caused some stimulus there. We could see mortgage rates get better.
Yeah. Like today, the bonds went down to like 4.59, 4.6, something like so. 20 basis points down.
Yeah.
Kind of made the rates drop a little bit.
Absolutely.
I was talking to a gentleman the other day, and we're going to put his house on the market, right? And he goes, "Oh, I got a buyer. My contractor guy wants his friend wants to buy it. This and that." I said, "Great." The price he gave him, I said, "Absolutely, I would go with it, right?" So they go with it. He gets a mortgage commitment and all that, right? Realizes what his payment is. His rate was like 7-something%. He goes, "Oh, I thought I was only getting 3.5." I go, 3.5? What are you, like 5 years ago? The guy actually walked away from the deal. I just
the payment was too crazy.
The payment was too crazy. I just put his house on the market. And hopefully we'll get it sold.
Yeah.
And he'll probably end up getting more money too, because now you don't just have that one buyer. Now you got it on the MLS. You got all these realtors going crazy showing
bidding
it.
and competing for it.
So hopefully, we'll sell it for a lot more.
Yeah.
But people don't realize, that payment with a 7% interest rate versus a 3.5% interest rate is huge.
We're talking $1,000 difference.
Oh, easy.
In just interest.
Right.
In just interest.
Now you take a $500,000 loan at 7 or a $500,000 loan at 2 and 2.5. What? You're talking probably $1,400-$1,500 difference.
Great. Yep. It's nearly, you think our interest rates, if you look back at the, I didn't look back at the low of interest rates. I actually recently looked back at how long we've been in this 6 to 7% range. You look back to January of 2023. Now we're going 2 full years. The average interest rate was like 6.49. January of 2024, the average interest rate was 6.62. Now January 2025, average interest rate 7.11. So we've gone up in actually 2 years, but we're still in that range. And then if you actually look overall, look at decades. Now, again, you've been in the business a long time, Vito, a little bit longer than me. And in those decade ranges, though, and you look, the 2010s to the 2020 time, rates were anywhere between 3 and 4.5% for a decade. So will we be in the 6 to 7% range for a decade? I think about that, and I try to prepare my clients. That's all. I try to educate and prepare.
No, I agree. And, everybody's saying, hey, we need these rates to go down. We need these rates to go down. Yeah, we need the rates to go down, but we need people to put their house on the market too.
Yes.
Think about a 7% interest rate, and you're still getting multiple offers because there's no inventory out there.
That's it.
But now, all of a sudden, the rate goes down to 5.5, and you still have the same inventory. These prices are going to get jacked up even more.
Go through the roof. They're going to go through the roof, and we've had the lowest origination volume since 2014. That was the only other time. We were actually a little bit lower than 2014, but to compare, so to put in perspective, people are still buying left and right. Even though we have had the lowest origination volume, people are still buying. We closed 348 loans this year. So we're
That's
averaging
huge.
just about 30 loans, and 95% of those are purchases. Right? Very little people are refinancing with these rates. Maybe a cash out here and there or whatnot. But my point at it is we're still doing 28 purchases a month. 30 purchases a month. People are still buying with 7% interest rates, and that's going to keep the home prices steady, especially in northern New Jersey.
Yeah. I went to the bank the other day to cash a check, and we were just talking. Hey Vito, how about a HELOC? For the houses, the rates went down.
Yeah.
But that's still probably now
Still high.
Still high.
Yeah. So the Fed cutting rates actually cuts the home
equity
rates,
loan,
right?
But you're still hovering around 7% on that,
Above it, yeah,
or even above, because it's always a couple points
with
over
the premium.
Right.
Yeah. So you're still, I would say, between 8 and 9%. And maybe obviously if you got worse credit or your loan to value.
Right.
But they're still high. They're still high. I mean, home equity. A lot of people did home equities though this year. We did a couple dozen home equities this past year. So people still want them even at 10%. When the rates were even 10 or 11, they're taking them out because it's 10 or 11, but it's on 50 grand.
Right.
It's not on 500
grand. Right. So your company also does.
We do. We third party home equities. So we don't do them in house. We have a referral partner that we do them through. They fund in 5 to 10 days. Super simple, very easy. It's all algorithms and online. Going through a bank, I won't mention banks' names, but going through banks is like pulling teeth. Same with mortgages, same with home equities. You can't get anyone on the phone. The only time you could ever get someone on the phone is when you actually inquire about it because they want to get the sale. Once you get the sale, goodbye. You can't hit a processor, talk to them, and it takes days to get email answers, and something. Again, we differentiate ourselves as a 100% mortgage company where you call, we pick up. You email, we answer.
That's it. And that's what's great about going to a mortgage company, because you always get people, hey, I'm going to go to my bank. My bank, has my money, they're going to do the loan for me. And I always tell them, go, don't go to your bank.
Yeah.
Go somewhere else. And everybody, but I do all my banking there. This is the rate. Yeah, lots of luck.
Yeah.
Okay, maybe you'll get that rate, maybe you won't.
Right.
But what they're going to put you through, forget it. Go to a mortgage, go to HQM, and you'll see the difference. I just had one where I actually called Johnny on it too, where they went to a bank. Mm-hmm. They got approved. Everything's done, okay? Now the bank comes back and says, we need a CCO for the property, okay? I said, okay. Here you go.
Odd requirement, but okay.
It's right.
Yeah, we don't require
You don't
COs
require,
typically.
right.
Okay.
Okay, no problem. Here's what the town requires. They only require smoke and certification and carbon monoxide or whatever. You don't need, some towns, let me explain to everybody, some towns require CCO where they come in, they go through everything. Little thing.
Plumbing, electrical.
Right. Other towns just require smoke and carbon.
Yeah.
So they came in and said, we need a CO. Well, we gave you this. No, we need a CCO. But the town doesn't require it.
A bank required that?
Yeah.
Wow.
We said because the appraiser, I guess, wanted it or whatever.
Yeah.
And the loan was like minimal. If I tell you what the loan was, it was peanuts compared to what the house was.
Yeah.
So we go back. We said, here, call the town. They called the town. The town even told them that.
We just need the smoke. And,
right. That's all we do.
Carbon, yeah.
They wouldn't fund the loan because they still wanted a CCO.
Wow. I've never actually heard that.
Me
honestly.
too.
Yeah.
Never heard of that until this time.
Wow.
And we're like, that's why I called John. I said, look, what can we do here? He's like, I can close this in a week. Again, the loan was minimal, but it's ridiculous. That's why I tell everybody, be careful when you say, I'm going to go to my own bank, you know, and I'm not mentioning any banks' names out there because I actually go to that one bank.
Yeah.
But it's ridiculous.
It's wild, the stories we get. I have clients that come to us, high-ups too, working really good jobs, really good positions, making really good money at very well-known banks, not very publicly traded big banks, Fortune 500 banks. Then they come to us, they're like, I'm like, well, have you called your mortgage department? I'm just curious. I'm like, they give incentives to work with them, and I'm like, I know we could do better on the rate, or at least match what they're offering. I'm like, we always will. We'll put our best foot forward for you in that position. But I'm like, you're a pretty good position in the company. Have you? I'm curious. They're like, I will never work with this bank for a mortgage. I'm like, I'm sorry, but I'm like, we know why, and obviously some of them do too.
Right.
So it's always important. If you want anything, you're going to call an expert and someone who does it 100%. All we do 100% of the time is mortgages, night and day, 7 days a week. Same reason you don't want to work with maybe a part-time realtor. You want to work with someone who only does real estate.
Right.
Not sells cars on the side. I'm just,
No, I hear. No, I
hats
hear
off
you.
to my entrepreneurs, but
No, but I hear you, because a lot of people say, "Hey, my cousin Joe got his real estate license." Okay, go with
sure.
cousin Joe, no problem. Then he would call, "Hey, cousin Joe was telling me about this. What do you think?"
Yeah.
Well, you just went with cousin Joe. Why don't you ask him? He doesn't know. Well, that's why you don't go with cousin Joe. Use somebody that's been in the business a long time, or have cousin Joe, come to me. We'll talk. I'll tell him what to do. A lot of times too, is people don't realize in the real estate business, being in the business for over 30 years, you get to know a lot of different realtors.
oh yeah,
Okay. And, a lot of different realtors get to know you too. So it's a lot easier sometimes, trying to get that deal done with somebody that you've dealt with in the past.
Oh my gosh.
Never had any issues with. We have new agents in our office would call me, "Hey, did you ever deal with so-and-so?"
You're like,
"Oh,
yep."
Absolutely, I did." "Well, I have an offer." "Okay, hold on a minute." I pick up the
And you make
phone.
a
"Hey,
call.
this is, what?" "Oh, great. I'm glad you called me. I know they
Yeah.
were new, whatever, whatever I can do to help them out."
Yeah.
We worked good together. But that's what it's all about. It's all about the relationships.
Yep.
And the same thing with you. I mean,
Yeah.
with the referrals. I mean,
Yeah.
people are going to call you constantly. You did right by them. They're going to keep calling you.
That's it. The review. They are your review.
Right.
They're your 5-star review, and they're better than that, in ways, because they're, especially depends on their relationship with that referral. The brother, sister, cousin, friend.
Right,
They're really
right.
like, oh, I really, Vito, I trust you, so I'm gonna use who you tell me to use.
Yeah.
And I bet you 99% of the time it works out great.
Oh, absolutely. I mean, I've had people where, "Hey, who do you use for a mortgage? Who do you use for an attorney? Who do you use for this?" And naturally, we got to give a few different names, attorneys, mortgage reps, home inspectors, everything else. And they go, "But who would you use?"
Yeah.
Okay, I'm telling you, they're all
Yeah.
good, but, my daughter used this guy, or, my friend,
Exactly.
and the attorney, I use this one all the time, or whatever. And then when the deal starts going forward, they're like, "Wow, this is so smooth."
So smooth.
I pick up the phone, I get you. I pick up the phone, I get the mortgage guy. I pick
Yep.
up the phone, the attorney. I get the attorney at night. I get everybody at a kid's soccer game or
Yep,
whatever.
yep.
But that's the key in our business.
100%. Especially just think, it's all about eliminating the risk in any scenario. So it's really not, it's like buying insurance, right? You're buying insurance to eliminate your risk. Yes, you might never need that insurance, but you want to make sure you eliminate the risk. So in a deal where you have the real estate agent, the attorney, the lender, the title company, and the listing agent side, everyone is working with each other, has worked with each other. There is a business relationship, but a professional one. And then just say there's an issue. Guess what? Everyone's going to get their heads together to figure it out. And they're going to work together. If you know the listing agent, you've worked with them before, you're going to pick up the phone. You're going to say, "Hey, Jim,
Right.
we got to figure this out. This is the issue. My clients want this. Can you talk to your sellers?" It's going to be a better deal for the clients. Ultimately, that's the key. It's going to work out better. You're going to eliminate the risk of, "Oh, well, this person doesn't know this person. We can't get a hold of the mortgage company. We can't get a hold of the attorneys being a total you-know-what to the other attorney."
Yep. They put on
Their bravado, and they're like, whatever. Or our attorney's not responding. Now the other attorney and the sellers are getting annoyed because our attorney's not responding. because they're on vacation, they're not, whatever it is. So, having that and eliminating the risk of, if there's a problem, that's what you really want to do is I want the best of the best in case there's a problem. In case there's an issue on the mortgage side, you want to make sure the mortgage company's experienced like us, right? Like HQM, we go through this time and time again. We've foreseen multiple issues and we have solutions and resolutions. And we're not afraid to call everyone and be like, hey, this is the resolution. How can we work this out?
Right. Like here, perfect example, right? Title company. You mentioned title companies, right? I had a deal one time, and the people wanted to use their own attorney. I said, no problem.
Sure.
Does he do real estate? Yeah. Okay. They order title. They do everything, through their attorney. Now, their attorney uses their own title company naturally. Okay, no problem. Something came back with the title, but it was something stupid where the other attorney, if he would have been with my attorney, would have been like, "It's not a big deal. Let me call the title company and we'll get this resolved, right?" Oh no, they won't clear title unless this is done. And I'm looking at it. It was, when I tell you, Joe, I forget what it was, but it was something stupid.
Yeah.
So I called the attorney. Well, I've been doing real estate. I said, me too. But I go, I've never heard of something like this. So I go, why don't you do me a favor? I go, call my title company that I deal with. See if they'll insure that title. Okay? And then let me know. They call the title company. Sure enough, Kenny, Guardian Title. Yep, we can
do that, no problem.
Do that, no problem. The attorney now is like, wait a minute, why am I with this other title company?
Guy,
And I've been dealing with him for years, and he's giving me a hard time. So I said, so why don't you just switch title companies now, and get it done? Guess what? The other title company said, oh yeah, we can do it.
We could waive it, whatever it is. Yeah.
But it should have never gotten to that.
Yeah. It's a shame. It happens. We see it all too often.
Yeah.
We really do. I know.
But it's terrible when, people can't just, hey, it's something simple. Just let it go. Just like the CCO.
Yeah.
They don't require it.
I know. Well, especially when you get to big banks, other title, title company. Title's a tricky thing for sure. But really, when you cut things down, I mean, real estate in general, you could say, oh, real estate, right? I mean, that's why we have jobs to educate and be the expert for the client, because them doing it on their own would be terrible. A lot of times they would get, screwed over. Excuse my French there.
Yeah.
Would really get kind of screwed over in a deal. So that's why we have an attorney. South Jersey still gets me.
They don't use attorneys, but
and then you got realtors who think they're attorneys and are like, oh, well, the contract's this and the contract's that. But I think attorneys are the most underpaid in the transaction.
Oh, absolutely.
I think they deserve more every day.
Yeah, you figure an attorney, going through these attorney review letters, preparing the deeds, looking at every little thing here. Some attorneys will try to, pull a wool over the eye on the other attorney, put a word in here, or when they're going back in attorney review, they agree, then he sends it back, and all of a sudden he realizes he changed something. But again. These attorneys are charging what, under $2,000 for a closing? Come on.
I know. It's wild to me. They're fine. I'm starting to finally see them push their prices up a little bit.
They have to.
I mean, it's funny, and then the whole industry is it's coming after realtor commissions, and mortgage commissions have been cut left and right every day since the beginning. Doesn't even faze me anymore. It truly is about helping the client and loving what we do, and we get to handpick, and we're blessed to have the referrals and everything we have. But attorneys, I'm fighting for you, attorneys. Got you.
Me too. I got you guys. But speaking about with commissions and stuff too. Well, back in the day, it was crazy because. The prices weren't that high. People, were a little bit different when they're in the buying or selling, and, they get stuck.
Yeah.
Where, hey, I'm not giving in.
Yeah.
And all of a sudden now the realtors got to get involved. And sometimes for $1,000, they don't care.
We've seen
It's
it.
a matter of principle. I'm
Yeah.
not giving in for that $1,000.
Yeah.
I'm not giving in for that. And I'll call the other agent and I'll be on the other end and say, look, it's $1,000.
Yeah.
How about we split it, $500 each?
Take it out of your commission.
Yeah.
Yeah.
I would get the realtor going, oh, my office won't let me do the $500. I said, all right. So you're willing to let a $12,000 commission go out the door
for
for
$500
$500?
Yeah.
Yes. Okay. No problem.
Yeah.
I'm not willing to do that, but if you're willing to do that, I'll do it.
Yeah.
So all of a sudden, I'll call him back. I said, just to let you know, an attorney's going to be writing the letter, killing the deal because you don't want to give the $500.
Yeah.
I was willing to give the $500, but
if you ain't gonna do
if
it,
you ain't going
yeah.
to do it, I'm not going to do it either.
Yeah.
I'm not giving the $1,000 because guess what? I got the buyer, and this is when it was a buyer's market.
Sure.
I'll sell him something else. I could
I
care
get what I'm
less.
saying. Yeah.
What do you mean? What do you mean? I said, yeah, he's going to be sending the letter out. You're not doing. Wait, hold on. All of a sudden,
Then we
I'll
talk
give
to my
the
office manager. Yeah, whatever. Yeah.
And you got the $500. But come on, give me a break. For $500,
man.
you're gonna let that go?
That's a shame. I mean, we have realtors cutting their commissions $5,000.
Grand. Oh yeah, I've done it. $5,000. I've done $10,000.
Yeah.
If you got both ends of it, and
Of course,
to get
yeah.
the deal done, or in inspection issues, and they can't figure anything
Yeah.
out, and they always come to you at the end.
100%.
I've done it where we're at the closing table and something came up at the end, and you as the realtor,
that, yeah.
nobody's there, nobody wants to give in right away. The attorneys. How about you? You're getting a nice commission check,
Yeah.
How much you getting there? You think you can give away, $1,000 or $500? But it's insane because people don't realize too, even as a realtor, it's $1,000 commission.
Yeah.
Say you work for a company where you got to pay, a franchise fee.
Sure.
All right. Then you got, your E&O insurance.
Mm-hmm.
Then you got your taxes you got to pay on
Yep.
there. So all of a sudden, that $1,000 is what? Say
450.
400, maybe even less after you got to pay your taxes and stuff. You
yeah.
can't even go out to dinner for that.
Nope.
So you know what? You might be better off just giving up that $1,000.
Oh.
You're only going to make a few hundred anyway.
And especially if you've had that client for a year, 2 years, you've shown them houses, nights, weekends, you've done it nonstop. I'm curious, where do you think the buying side of real estate will go? Not just, yes, the NAR settlement has changed the game and will continue to evolve, but I have some interesting I've heard some interesting ideas from some experts around the world. I listen to some podcasts and stuff. But I'm
Do you
curious.
listen to Vino with Vito podcast? Of
course I do.
Okay. Just wanted to make sure. I'm kidding.
Yeah, I get to watch it live right here, right
There you
now.
go.
I get to be on it. I'm privileged. I'm like, this is me in all my glory right now. I'm mad I can't be drinking wine, but don't worry, 2 more weeks, get me
That's
back.
it. We'll get you back. We'll see after Trump gets inaugurated, and we'll
Yes.
see where the interest rates
Yeah,
go.
and then we can re-talk that. Yeah.
Yep. But you were saying about the buyers.
So an interesting one I heard recently was that they're going to have hologram agents walking you around the house. So, obviously as a buyer's agent, and I don't know if I mentioned, right, I started this business in real estate. So I was a buyer's agent on a big team, and I learned a ton in my time there. And all I did was, take buyers out, take Zillow calls, just hammer them down and show them houses 7 days a week. Every day. I mean, that's all I did. That I would go to appraisals and home inspections for the lead agent I was working under, and I would just do those, and I would just talk to the appraisers and learn everything about appraisals. Talk to the home inspectors. I just follow them around.
Yeah.
What's that? I don't think I knew what a hot water heater was until I got into real estate. My parents never owned a house, still don't own a house. I was the second person in my family to own a house, and now I've owned 2 and 3. So we've moved on from there, but learned so much. So. Just thinking of where buyer's agents go and being in the mind of a buyer's agent, as I was for a time, the hologram. So what they're saying is they're going to have, say, a buyer's agent and be in their suit, but at home. And then they're going to hologram into the house at the appointment time. The clients will punch into the house, and then the hologram will be there, meeting them and greeting them, and then it will be a live person though. and just walking them around the house, kind of like a Total Recall, right? When they had the the hologram girl, right? When you walked in, the waitress or whatnot. So, I think I could see that happening, but I was curious what you thought about that. Was an intro. I heard that one the other day, and I was like, wow.
No, I mean, it's not the same as, somebody actually being there talking to somebody and showing them around. I don't think that it'll ever happen.
Yeah, right.
I really don't.
Do you think buyer's agents will still continue to show? You think they'll come out of the buyer's agent's side and maybe like the clients will show themselves the house? Like, it's so tough, right?
It's tough, but you think about it though. If the client's showing themselves the house, as a realtor, everybody thinks, oh, you open the door, here's the kitchen,
right?
Here's this, here's that. But as an experienced agent, here's the kitchen, but oh man, what a terrible job they did.
Yeah.
It's my job to take the good and take the bad, And sometimes people will be like, well, what do you mean it's terrible? It looks great.
Yeah.
Well, but you didn't notice this or you didn't notice that. I got a construction background too. And I can tell, oh my gosh, thank you so much. I would have never, really noticed that. But that's where our work comes in, at least mine.
1,000%.
Half of these realtors could care less. They just want to sell the damn house and get the hell out of there.
Yeah.
But sometimes, you got to do it the other way. And that's where your referral business comes in.
Oh, 100%.
Being truthful, letting them know what's going on, cutting that commission.
Yeah.
All of a sudden their Uncle Charlie wants to sell their house or looking for a house. Hey, you know what? Vito took care of me. Let me call Vito back.
Yeah.
Same thing as you in the mortgage business. Hey, Joe gave us an 1/8% less than anybody else.
Yep.
And you know what? People look at an 1/8%. Yeah, it's not that much. 8% on 500 grand, 700 grand.
Yeah,
it's a lot of money every month.
It's a lot of money.
Times 12, times 30. You know what?
And what they don't see in the background too is we're literally cutting our commissions. So like we're actually paying to buy down rates for clients. So when you say you're cutting your commission there, I'm like we're having to cut our commission every single time almost, because we want to take care of this person, that person. I'm like, so on the mortgage side, we cut our commissions every day. Right, the commission you can make 3 points. I'm like, we don't make 3 points. I'm like, you make half a point, but you do it because you want to keep the client, keep them happy, give them the best deal possible, and make sure ultimately the referral partner and the clients, the deal closes for everyone. You want the deal to close because you want the house, right? I would say to the clients, do you want the house?
Right.
What payment are you comfortable with? How can we work this out for you and make this happen? But yeah. I think the buyer's agents, on the side, it's one of the most undervalued positions. It's so important to have a strong and good buyer's agent. But I'm just curious again if it really turns into, who knows where it will go, but if it really turns into start cutting buyer's agents' commissions, right? Sellers stop paying out. I do believe they will still pay, and as we see already, they still are
paying. Yeah.
But if they're not paying, I'm like, well, how could you justify going out and showing someone 150 houses for no money?
Yeah.
At all. It's like even if you want to do it, it's my best friend, but I'm like, well, it doesn't make me any money. I can't do it. I'm so sorry.
At the end of the day, it's costing me money just in gas.
In gas.
I got a big car I drive around. The gas is expensive nowadays. I got to put premium in. But
I had a Jeep Wrangler when I was a realtor. I was like, what a silly car I had.
When the gas prices shot up and you had to take back then, you weren't meeting at the houses and stuff. You would drive everybody around.
Yes.
And I was showing one guy houses. It was actually a relative, and we're going around showing houses, not buying any houses. One day I told him, I said, either you're paying for my gas or I'm coming with you and you're driving around. You know? But you mentioned something before, buying down, the rate.
Yeah.
What can you tell everybody about, buying down a mortgage rate? If you're at 7% on a 30-year fixed, and you want to try to get a lower rate, are you paying points? Or is there all different scenarios you can do for that?
Yeah, there's a couple different. So one, you could just straight buy down the traditional rate, when we talk about rates, is a 30-year fixed mortgage rate. Right? That's when anyone says, what's the rate, where the rate's at, what the news puts out. It's a 30-year fixed mortgage rate. So just say, for example, it's at 7%. That's a no-cost rate. Right? In the media, sometimes they'll quote rates, and then you have to see the fine print.
APR and
this
everything.
This is 20% down. This is 780 credit. Blah, blah, blah. This is coming with points, not. So anyway, but a 7% rate, say it's no points. You want to buy it down to a 6.5. Say it costs $10,000 in points, right? Points is a percentage of the loan amount, but we actually don't even use the term. We do say buying points, but a lot of times I just say, hey, it's going to cost you 10 grand to buy it down half a point. Well, half a point is going to save you $300 a month. So we're going to take 300 divided by 10,000, and it's going to take you 42 months, whatever it is,
to pay it.
To see the recouping of that $10,000 in your $300 cheaper a month payment. Do you think you're going to refinance in 3.5 years? Well, I don't know, Joe. You tell me. I go, there's a chance. Absolutely. I would say 3 to 4 years, I wouldn't buy the points. Say you'd want to see that savings in 2 years or under. It's just not there right now. Now, a second option is a temporary rate buy down. It's kind of like an ARM, an adjustable rate mortgage. The rate adjusts, but just for a fixed period of time. So, for example, if you were at a 7% rate today for your first year, if you did a 2-1 buy down, you'd be at a 5% for year one. So you see a lot of savings. It's probably $800 cheaper a month in your payment.
For year one, right.
People are like, oh, yeah, I love that. You have to pay for it, though. So 5% year one, 6% year two, and then 7% years 3 through 30. And hopefully by then you're looking to refinance. The temporary rate buy down, I would say makes more sense. You have two options to do it. You could either pay the points. So that would probably cost you 15 grand, right? Because it's actually the 800 times the 12 months, and then the 400 for year 2 months times 12, and then you add those two numbers together, and that's how much it costs. So it's the savings, basically time the months equals the cost of it. I'm going to quiz you all on that math after this. Say, Chris, you taking notes? I'm yeah.
I'm listening because I like math, but go ahead.
Yeah. So that scenario makes sense. You have two ways to do it. You could pay the money to do it yourself, or you can get what's called a seller's concession.
I was just going to say that. You might be better off doing a seller's concession and getting it done that way, because think about it. You get the seller's concession, right?
Yep.
But that's why you got to talk to experienced people like us, right? Like you said before, in 2 years it makes sense, or 3 years, whatever. But now you do a seller's concession, right? And you do a $15,000 seller's concession. All of a sudden, 9 months from now, the rates drop dramatically. They plummet. Now you can go back and refinance.
Yep.
You didn't pay all that money.
No. And that money gets actually put back in. So that 15 grand in a seller's concession, not when you pay it. You have two options. You could pay it, or the seller will allow you to finance it.
Or you would have to pay it, with the seller,
right?
Doing that. But I think it makes more sense doing it as a seller's concession and not worrying about coming out of your pocket for 10 or 15 grand.
Why not? That's only another $100 on your payment, right? Roughly. It's about every 10K is about $65, $70 a month. Right. So let's just say $110, on your payment there to finance 15K. But it's going to cover you, and you're going to have a $700
savings,
for year one. Most likely, you're actually not going to refi in the first year because rates aren't going to go from 7 to 5.
Right. Unless something dramatically happens.
Right. And the hope is obviously that rates, drop within that 2 years, or worst case scenario, you're just at where the 30-year fix was going to be at today anyway.
Right.
When you would have closed.
Yep.
Yeah. That's our favorite program, and I would say, 1 out of every 3 buyers are taking advantage. The one caveat is the home has to appraise for that higher amount.
Right.
To get the seller's concession.
But nowadays it's insane. I mean, the appraisals are coming through, I just had a couple of deals where, never thought it would appraise, but again, the people were buying cash, so it ended up working out because now the appraiser can use that house for the next house, and because again, you didn't need an appraisal, it was cash. So
well, that's 2020, right? And I know we talked about it last time when we were here, but 2020, 2021, everyone was buying, waiving the appraisal because it was so crazy. Rates were so low. Every deal made sense numbers wise. They were going 75, 100 grand over, and they were waiving the appraisal, and it would come in 20 or 30 or 50 grand light because the comps were from 2019 to 2018.
Right. They weren't supporting it.
They weren't supporting it. But now those comps that you closed on, they waived the appraisal, they paid the extra, or they took it out of their down payment and financed it essentially. Now those were the comps, and they left. So now we have comps from 23, right? You know, we have comps that have been sitting there and building and building and building. So you come to, well, now 24 now, right? Because we're already in 25. But now the year 25, I mean, you know, appraisals are really not a worry as much.
Right.
And most people aren't going 100,000 over. It depends on the town.
But I had one, and I mentioned it last time. The people were putting 10% down.
Mm-hmm.
They were waiving the appraisal, I think, up to 70 grand or 80 grand. I don't even remember.
Yeah.
No, 40 grand. The house didn't appraise.
For even the 40 grand?
For not even a 40 grand. It under appraised for like 50 grand.
Wow.
So the people ended up lowering the price, I think, 10 grand.
Okay.
But even though they were putting 10% down, they were able to do the loan because instead of doing a 90-10, they did a 95-5.
Yep.
They were
They
still
went to
paying
5%
PMI
down.
and
Yep.
everything else. So it didn't matter.
Yeah.
But a lot of people don't realize that. If you really want the house in today's market, and you really, I always tell people not to waive the appraisal, but it's totally up to you. But it can be done, you know, up to a certain amount.
Yeah.
And that's what we did. It was an $800,000 house. We waived 40 to 5%, under appraised for 50. They got 10 back. It was a 95-5, and the deal worked. You know?
I think we know better than most that just it's about obtaining the property. Really, and I would say, do you want the house? Do you want to own a home? Do you want this home particularly? You know, how bad do you want this home? You don't have to want a home. You can rent. You know, I don't like the victim mentality of like, oh, well, you know, if I rent, I'm throwing away. But I said, okay, well, you don't have to own a house, right? If you want a car, go into a car dealership. Do not complain about all the numbers of buying a car, where the rates are at, where this. You control none of it. I control none of it. Vito controls none of it. So all we can do is educate and best guide you and be your fiduciary to fight for you in every aspect of the transaction.
Right.
But, you know, if you're putting down 10%, be willing to come down to 95 loans, 5% down.
Right, right. You're paying PMI either way. You know, it might be a little bit more, but still, you got your house. And you know what? The people that did that are ecstatic.
Yeah.
They're in their house. They love it. It's been a couple years. You know
Their
what?
equity has built.
Their equity
has gone up.
2.5 years from now, their equity has gone up, and now they're probably at the 20% level. Where people don't realize too, that's another thing, where with these prices going up so high, right?
They're not going to stop.
And they're not stopping anytime soon.
No.
So somebody that bought a house in 2022 only put 5% down.
Yeah.
Okay.
Yeah. Where are they at? Vito?
Where are they at right now, right? Call Vito. I'll help you out as much as I can. Call Joe. Joe's going to help you out as much as you can. I did it with my niece back in the day, where all of a sudden, okay, you put 5% down. You bought the house for 800 grand, okay? Now, you only put 5%, 800 grand, you put 40 grand down. That house is now, and you're paying PMI.
Yeah.
That house now is worth $1 million.
Yep.
Your PMI is gone. That PMI could be $200 a month, could be $250, could be $300, depending on, you know, what you got.
Yep.
Now, all you got to do is call your bank.
Just call the servicer.
And that's it. And the bank's going to say, no, whatever. Fight it. And
get the appraisal
Get
done.
the appraisal done. If you'll pay, you tell the bank, I'll pay for your appraiser to come out and do the appraisal.
Only a couple $100 that
right,
way too.
That way
it's really
too.
Not that
right.
bad. Yeah.
And half of these guys are not even going to come out. They're going to go on the computer and they're going to go, oh, shoot. Okay. Yep. And guess what? You just saved, say, $250 a month on your PMI.
Yeah.
It's $3,000 a year.
As long as you're doing a conventional loan or did a conventional loan, you could do it.
Yep. FHA now you can't do it, but
then you call me and we refinance you, get you in a conventional loan.
Conventional, right?
We might not even need an appraisal. The
That's
value
it.
might just be on the automatically on our system.
But people don't realize that.
Oh, yeah.
That's another business to get into. You know,
It's-
just being a consultant doing that.
Yes.
Think about it.
Do you do BPOs?
No.
No. It's a pretty. It's funny. My brother just did that. He just got his PMI off. He was calling me about it. I looked up some comps for him. I was like, yeah, you're good.
You're good.
He was
Yep.
up in Waldwick. I was like, you're good. You bought it for $5. It's worth $750. Whatever. You know, he bought, I don't know, 5 years ago. You know, I was like, call him, get this PMI.
Yeah.
So they sent out an agent. And I was like, let me know who they're sending out. He's like,
Yeah.
they didn't really tell
Tell
me,
me.
you know. So I was like, let me know who they're sending
Yes,
out.
sir.
Get her card or something. And I was curious if it was an appraiser or not.
Right.
He's like, it's only $190. I go,
They sent an agent
They
out.
sent an agent. She did a broker price opinion.
Yep.
And they waived the PMI, and took it off.
Yep.
So,
Your interest rate stays the same.
Same,
Everything's the same. Just your PMI is gone.
It's just PMI is private mortgage insurance, and it's really for the lender to protect them. Right. In case you foreclose,
Yep.
in case you default on the loan. So the banks don't mind because it secures them. They're like, well, the value's
higher now. Yep.
We're
yep.
good. If you don't pay your mortgage, I'm taking a higher price home.
There you go. It's not worth $700 anymore. It's worth $1.2 million.
Oh, I love it.
But that's why it's so important to listen and watch. You know, there's a lot of things, you know, people like us, right, that know and can answer a lot of these questions that, you know, your part-time agent can't answer, or, you know, your part-time mortgage guy can't answer.
Cousin Charlie who
or
bought
cousin
two
Charlie
homes
that bought two homes
over
and
the last
knows
2
everything.
decades. Yeah.
Right. But that's why it's so important.
Yeah.
I mean, just on that PMI alone, you know,
I know.
I hope everybody took a lot out of that, because a lot of people, and again, you know what? I might actually start making some phone calls looking back at the people I remembered that put less money down in 2021 or 2022 and tell them, look, you know what? Think about it. You didn't refinance because you got a 2.5%, 3% loan.
Ain't touching that.
Right. You ain't touching that. But you're still paying PMI that's costing you a couple $100.
Yeah.
Maybe you save a couple $100 a month by not by not doing anything. I mean, you're not doing title again.
No.
You're not doing it. All you're doing is
Nothing.
taking that PMI
Yeah.
out.
And if it was past the 2-year mark, they may be able to take it off by just a phone call. They may not have to come out.
They might not have to come out.
Yeah.
I agree.
If the value's really there, if you bought in 2020, 2021, the value might just be there online, or the loan has been paid down enough to where, you know, if you put 15% down, they might be able to just take that PMI off right away.
Yeah.
So it's worth the call.
Yeah. This was a great conversation, man.
This is awesome.
I love it. My wine's done, and I only drank a little bit today. We couldn't, since we got dry January here. But
I promise I will have my glass. I'll have 2 glasses next time I come.
And you're going to come next time because I want to see in a couple weeks what ends up happening with the inauguration and you know with the interest rates.
Yeah.
Hopefully they, like we say, we all want them to go down, but if they do go down, I think the prices are going to go even higher. But we just need people out there. Please put your house on the market. Call me.
Yeah,
I'll let you know what it's worth.
Yes.
You know,
call Vito. You have your expertise right here. You have 30 plus years of expertise in any question there is. He knows it.
That's it. And any mortgage questions, call Joey Mortgages.
Absolutely. DM me, whatever it is. I got you. I answer everything.
There you go. And we answer our phones.
Yes, sir.
On that note, one day you will need to buy or sell a house. And when that day does come, you need to call Vito Contuzzi, the godfather of Northern New Jersey real estate.